What's happening, everybody? It's your boys, Steve Straza, Sean McLaughlin. This is the Flow Show. Hope everybody had a great weekend. Straza, I heard you were house shopping this weekend.
I was. We're very excited. We're leaving our island life behind, heading up to Palm City soon.
Man, this new bull market must be treating you well.
Hey, you know, last week was a big week, though. I mean, have you heard that we're thrusting?
I've heard that's your favorite buzzword
Yeah.
of late 2023.
Yeah. Yeah. Listen, the price action looks good. Stocks held where they needed to. Now it's back in the Bulls' court, so we'll see. But how are you feeling in terms of your willingness to put on directional bets after the action?
Uh, I'm warming up to it. In fact, for All Star Options subscribers today, I got a bullish bet queued up on deck. About to get into it probably right after we get off this call. Yeah, I'm willing to dip my toes back in here a little bit, Straza.
Yeah, I think there should be some good opportunities as we head into year end. Maybe those seasonal tailwinds finally materialize. Maybe a lower dollar and interest rates finally maybe peaking out. Puts a nice bid in risk assets, but we'll see.
I heard you guys talking this morning about JC loves pointing out what the Dixie's doing, the dollar index.
Yeah, he
And,
does.
and I don't disagree with his thesis at all, but I don't know, man. Is and I don't have an answer to this. I'm just going to ask this question out loud. Is the rally in Bitcoin, is that following the trend in stocks or is it leading the trend in stocks? You got any feeling on that?
It totally led this time around. And it's like everything's so clear with hindsight, but a few weeks ago, stocks were still under significant pressure. The entire market, was still kind of selling off. Bitcoin was breaking out above this, critical $30,000 level that we've been looking at and talking about for so long now. And when you look back to it now, it's like from a risk appetite standpoint, that was huge information, right? Like, is Bitcoin really going to be breaking out, resolving higher from like a textbook reversal pattern in an environment where stocks are, experiencing a worsening corrective phase, right? And then what happened was it took a few weeks, but then finally stocks kind of caught up. And last week, now stocks you're starting to see follow crypto and Bitcoin higher.
Well, hey man, it's been a good month to be Michael Saylor. So shout out to Michael Saylor,
I'm a
CEO
fan.
of MicroStrategy, MSTR, the de facto Bitcoin ETF. I heard you guys talking about that this morning also.
Yep.
Good stuff. By the way, this is the Flow Show. We're going to dig into the options flow in just a second. But before we do, I want to, if anyone watching out there, let me know. How do you feel about me bringing flannel back?
I love it.
Are we
I
on
love
board?
it. It's the right fall wear, where we the first week of November. Yeah. Flannel gets me going. I want to go see the leaves turning colors, put on my flannel. You look like a lumberjack. I love it.
Well, I'm gonna go chop some wood as soon as we're off here. All right, so this is the Flow Show. And what we normally do in the Flow Show is we dig into unusual options activity to see if that could potentially lead us down the rabbit hole into some new trades. So, little background here at All Star Charts. Me and Straz and the team, we follow a lot of things, right? We look at we do a lot of top down analysis. We do a lot of filtering. We build a lot of lists, and from these lists we, or at least I, in the options world, pull trade ideas from those lists. So the options flow is not the only list that we follow,
Yep.
but it oftentimes will surface some trade ideas. We don't necessarily put the trades on that whatever the unusual options trader did, right? Like if they bought like a 10,000 call contracts on the offer in, weekly expiring options, we're not necessarily going to do that same trade, but those kind of trades sometimes can offer clues into a direction or a strategy that we might want to put on. So that's why we do this exercise. And Straz and I used to do this, kind of back channel in our own little private meetings. And then someone, I don't remember who came up with this idea, but someone said, you guys should do this live for people to learn your process and learn from you guys. So that's why we do this. So we're doing this out in the open. We would do this anyway, even if we weren't doing it live on YouTube. Anyway, there's that preamble, Straz. How'd I do?
And here's what I would say to you if we were speaking privately, and I'll say it right here. What a shit list. again this week. I feel like we come on here. I'm getting frustrated with this list. Even Fawn said to me last week, he's like, we should stop doing this or figure out a new list. Here's the thing. I don't pick the list. I have no say at all. What pops up on this list. We have some really brilliant friends over at the Trade Exchange who do this for us. Been doing it for a long time now, and they're very, very, I guess, selective, right, about the options flow that they put onto the list. So what happened last week, in my opinion, I flipped through all these charts. You see all the green at the top of the table here. There was one bearish flow in Bumble, which we did talk about in the morning show this morning. Stock looks terrible. But the other stocks, right, all the green here, all the bullish flow, most of these stocks look bad too. And I think what it was there was a massive dead cat bounce, right? The riskiest, most beat up stocks caught, a huge bid last week, more or less across the board. And I think a lot of the options market participants were coming out and putting bullish bets on these names. For us as technicians, it's hard to get behind those trades over any significant time frame at all, right? Because a lot of these charts look like you'd be trying to catch a falling knife.
So it feels to me, judging on what you just said, that we're seeing signs of a recovering market. And for the stocks that are leading, it makes sense to play the equities. Yeah. But people who don't want to miss those beautiful dead cat bounces on those stocks that are getting destroyed, they're willing to take a bet, but they're doing it in a defined risk way, using the options market to kind of protect themselves, right? You could buy calls and your worst case scenario. If that stock was not at a bottom and it's just going to roll back over again, at least that stock could go to zero and I just lost what I paid for the premium. I'm cool with that.
And I like the strategy, right? Like it's a sound strategy to do that via options, in this case, mostly call options, out of the money calls on the offer, right? That's bullish flow. Problem is for us as technicians, I need some sort of level. I need some sort of tradable low, right? Something to trade against. And a lot of these charts, it just wasn't there. So before I continue to complain, we were able to find one.
Let's see it.
This is Celestica. It's a mid-cap supply chain operator. It's a monster base. All right, so we've zoomed out almost 3 decades on this chart. We're showing you
3 decades. Who trades on that time frame, Straza?
We're going back to the 90s. And I'll tell you, Sean, it's not the first time you've seen
my flannel going back to the 90s, baby.
This is one of those dot-com bubble bases, right? Like you see the dot-com bubble peak.
Oh, yeah.
Way at the left-hand side of the chart. And then you got 2 decades of basing. Now the stock's trading at its highest level in about 20 years. Very well on its way, climbing up the right-hand side of this base. More importantly to me, though, if we're going to be in any trade for, again, any material amount of time, I need some sort of leadership to be in place. And you see this in the lower pane here, the relative trend. Been falling for 20 years, and then off the COVID lows, finally found a bottom. Been moving steadily higher against the broader market. Been outperforming now for a few years. I'd love to see this trend break, right? As the base breakout is kind of materializing. And if you zoom in, you'll get similar levels, right? I've fibbed this one from the 2017 highs instead of going all the way back and showing the full price chart. Same thing, kind of shows some sort of entry around this 22 level, 22 and change. Here we have it drawn at 21 3/4. You have the pivot lows. If you zoomed in on the chart on your platform, you'd see the pivot lows coming in around 22. I think you want to buy weakness in this one, but let's talk about kind of how you would craft this.
All right, so I know we did this I don't know if we did this last week, but recently we've talked about leaps. Those are long-term options.
Yep.
I don't generally trade leaps. I'm just, leaps to me are like investments, and I know my weakness. I'm a terrible investor. I'm just going to throw that out there. I don't have the patience for it. I'm terrible at it. I get shaken out at the first sign of weakness anytime I hold a long-term investment. I'm the worst investor.
What is your go-to time frame, Sean, if you had to define it?
Generally, if I'm making a directional bet in options, usually I'm doing a bullish directional bets. I shouldn't say that, but that's usually the case. I'm looking 3 to 9 months. That's a wide window, I know that, but a minimum of 3 months. Generally, I'll go as far out as 9 months. That to me is the sweet spot for swing trades. Now, that said, you just showed me two enormously long-term charts in Celestica, right?
Yep.
Nothing wrong with that. It is what it is. That's what's painting the picture. And
Yep.
so when I see a long-term, I mean, even your shorter-term chart there is showing a decade of trading, right? So if I'm going to trade a pattern that is taking a decade to play out, then as an options trader, I have to go as far out in the options as I possibly can. And unfortunately, not unfortunately, but the furthest I can go out, if you bring up my screen here, we can go next December. So December of 2024. That's a little bit more than a year out.
Yep.
We could buy the 40 strike calls for $1. We'd have to hit that middle there, but we could probably buy them for $1.60, $1.65. I don't hate that. I mean, it's $40 is a long way away from 25, but when you got a whole year on a resolution of a long-term base breakout,
you need to double.
Not terribly out of the question.
You need to double there. And I don't think it's at all out of the question. I mean, this stock does move. Like I said, it's a mid cap. It's tripled off its lows from last year. From like
this is the question I would ask myself. And I think anyone should ask themselves if they were considering putting a trade on in Celestica. If you were going to put a long-term bet on in Celestica, which, I mean, again, because we're looking at these super long-term charts, you got to think long-term.
Yep.
My question to you would be, Straza, do I have a better shot of doubling my money if I buy the common or if I buy these December 40 calls for $1.60? Where do you think you have a better shot of doubling your money? I would argue you do it in the calls. Now, you're not going to invest your entire account in those calls, right? You got to do it small, but I think you got a much better shot of getting better leveraged returns with the options than you do buying the stock.
If we're going to be right on those leaps, right, and this stock keeps climbing up the right-hand side of this base, we're talking about we're in the money at 40, you said?
Yep.
I mean, it's not crazy to think that this thing heads back towards those old all-time highs. You could be talking about a lot more than a double, right?
Right. And let's be clear. Let's say it doesn't go to those all-time highs. We don't need this stock to go to 40 for us to be winning on these options trades because we have so much time to play. Let's say it's traded at 25 right now. Let's say by summertime, the stock's trading at $35 or $30. We're probably sitting in some gains in these calls. Maybe not, huge gains and not year-making gains, but certainly we're sitting in some gains.
You probably have a double by then.
Yeah. So I don't, I like this trade, and here's why. And this is what we haven't said yet, is that if I buy these calls, these December 40 strike calls for $1.60, $1.65, whatever I can get them for, if I'm wrong, if Celestica starts rolling over and it doesn't look like it's going to follow through, I don't think we're going to lose a whole lot on these calls, over the next couple months. We could probably sell these calls for $1, get out for $1, and walk away with a small loss.
Right. There's so much time. Even though your risk is perfectly defined at your cost, you don't have to lose your entire cost basis. When you have that much time, the value of the options should not erode that quickly unless the thing gets absolutely decimated.
Right. We'll have plenty of time to take risk off the table to reduce our loss or even completely close the trade down.
I think the bigger lesson here today, I think the big takeaway, if you're watching this video, is simply that, and Sean, we've done it a million times, maybe you could speak to it a little bit. These giant base breakouts that you're looking at on my screen, right? I bring you these patterns a lot. They're leap patterns. Like, that's the strategy for a chart that looks like this. You're saying, oh my God, you're going back to the 1990s. Yeah, so you got to give it time to play out for that upside resolution to really materialize and get you to a place price-wise where you're very much in the money. And I think there aren't many better ways to play patterns like this than leaps. What do you think?
No, I like it. And this is a trade I would not have no trouble putting on. In fact, I might put it on. I like it. So Celestica, by the way, a ticker I have not heard before. I love it when that happens. I love the
heard of Celeste Pizza.
We got a whole 90s vibe going here, man. We have charts that go back to the 90s. I'm wearing a flannel shirt. We're bringing the 90s back. Celestica, I don't know. Sounds like Metallica. I don't know. I'm thinking of that. Like, dude, we got a whole 90s thing going here. That makes me even more bullish on this trade. All right, I like it. Straza, look, see, that's how we do it. Sometimes something just. You were bearish on the whole list today. Look at this. We found a good idea, even in a list that you hated. I feel like we found a good idea.
This one really stood out. It checks all of our boxes from a technical perspective. You're saying it checks the boxes from an option strategy perspective. Listen, what was it? 165, buck 65. Really not risking too much to put that trade on either, right?
Yeah, I like it. All right. Well, if anybody out there puts this trade on and makes a whole lot of money, then give us a shout. We'd love to hear it. Yeah, I think we'll end it there, Straz. I think we did some good work here today.
Always fun.
All right, this has been the Flow Show. He's Steve Straza. I'm Sean McLaughlin. Follow us on Twitter. Straza for him. Options Sean for me. Oh, I'm sorry. Are we calling it X now? I still can't. Call it X.
I'm never going to call it X.
No, it's so dumb. So dumb.
And Meta is still Facebook.
Yeah, that's right. And I'll never call it Alphabet either.
Right.
All right, guys. Take care. We'll catch you next week. We'll see you on the morning show tomorrow morning. Bye-bye.
Peace.